Objective of this is to grow your account. You times that by 20 trading days, because there's 20 trading days in a month, you end up with £3,080. That's good. That's the first month of you grinding, you not withdrawing, you being disciplined, only accepting 157 trades a day. Yeah, you might have predicted the next move. Yeah, you might have missed out on a great opportunity. It doesn't matter. Trading is about discipline. If you don't have discipline, you're in the wrong place. So if you want to be a trader, discipline and knowing yourself is a key thing into this.
Okay, so let me just pause you there one sec. Let's just recap on that first bit. So the plan that you're looking at here is for people to be able to start with a small account, even if they have a big account or they have more money. This plan will actually allow you to grow a small account into a larger account and then go forward with that. So you're keeping your risk to a minimum. So in this example, you've talked about starting with 1K, you've divided it by 3. Now the reason you're dividing it by 3 is because you're giving yourself free shots, aren't you? Free shots at essentially winning the account surviving. The reason you divide it by 15, that's because that would be 250 pips, wouldn't it? So if you were doing 50 pip zones, what this means is that in the market, you can allow a trade to run 250 pips against you, which would have triggered 5 trades, and 15 is the total R, the total risk. That would be the total loss. So this hits what you call your threshold, doesn't it? So this is your daily cutoff. So in order to protect your account, you're saying, okay, here's my maximum risk, 22 per zone. If it goes 250 pips, that equals roughly the free, at which point you cut and you stop for the day, don't you? So you said that you've hit your threshold, your maximum loss, what I refer to as the equity stop. Now, you stop trading for that day, and what you've essentially done is you've used one of your free lives. So you divide the account by 3 because you're giving yourself 3 chances. So the next day, you would then continue with the same risk, and you would hope to recover that, which we actually saw on your Trader Waves calendar, didn't we? And we'll go and have a look at that in a second. But I just want to make it really clear what it is you're doing. You're giving the account 3 lives. The number 15 is not random. That allows 250 pips of movement, which you've worked out over the last year allows you to survive almost every day in gold. You're probably going to get 1 to 2 stop outs per month. Would you say that's accurate?
100%. I think you should read it out, Ben. You way better than me.
Well, no, I think it's important that people hear it in your own words. So, right,
No.
you want to carry on for now and do the rest, mate.
Yeah, so like Ben said, is exactly like 15 is going to be 5 zones. It's very unlikely for the market to give 5 zones without giving you a retracement. That's from my experience. And even if it does, the fact that you have 3 lives, you have to hit 3 thresholds in a row for you to blow your account. It's impossible for you to do that. It's literally impossible.
I wouldn't say
you
impossible.
Can gamble
it's very unlikely. It's very unlikely. But if we just look at your first point, you started with a very small amount, like 1K. So you would only be losing, if you've got 10K, for example, and you start with 1, you've actually got 10 more chances and then 3 lives on each chance. That's the whole point of what you're doing. So if we go to the next bit now, where you've got your account to 3K, okay, you have your initial 1K is still there, plus 3K of profit. So then you change the risk, and what you're doing now is you're reducing that risk slightly. So if you want to talk through that.
So now you got into 4K because you made 3K plus the 1K, you're 4K up. So the next stage, my advice is risk 1.5. Now, the reason 1.5 is again, it's pretty much the same, 3 lives in a way, but 1.5 is a very comfortable situation. Like if you lose 1.5 here, you still have at least 2 to 3K, you should be fine. But same principles divided by 15, this aspect, so that you make sure that the market will have to go against you for 250 pips for you to hit threshold. 1.5 divided by 15 equals £100 per zone. To make sure that you give yourself a high win rate, you only do 5 trades. And 5 trades per £100 per zone is 500 a day. Times it by 20, you're making 10K a month. So within 2 months, so this is month 2, this is month 1, you got your 1K account to 10K. And it's you don't have to change your strategy. You don't have to adapt. You don't have to add any indicators. All you have to do is make sure you follow the risk management. All you have to do is make sure that when you get to your threshold, whatever it is here on your account, when it gets to your threshold, you close it, because you need to understand once it gets to the threshold, now each zone has doubled. So it's very fast for you to now risk as half of your account. But we only want to risk a third of our account, because in this strategy, we have faith that the next day you're going to make it back. So for example, if you're doing only 7 trades a day, it will only take you 2 trades. So it will only take you 2 days for you to get back your threshold.
Yeah.
And you're going to see from my history that you can easily make it back. It's very easy.
Right. So let's this will be a good point now. If you want to just go back to your history, and we'll actually show examples of this, because we've only got about 5 minutes left.
Okay, so if we go back to, for example, this month, or this one, May. I hit threshold here
on the first day of the month. A
on
little
the
bit
first day of
unlucky,
the month.
but there you go. You can see you've hit your loss, and actually, it's only a less than a 15% loss. So you've got a smaller threshold now, haven't you? You've hit threshold, but look at the next 2 days. The next day is $1,000, and the one after is nearly 600. So in 2 days, you've made that loss back, and then obviously the third day is a winner. So look how quickly you've recovered that. If you go to the previous month, because this highlights it beautifully. Now, first of all, we've only hit threshold once in this month. The other red day, as you can see, is a break even. So you've hit threshold once, and look at the result. So you 10x the account in this month. Now, this is an example of what happens when you control the risk exactly as you should, and this is how often the threshold will be hit. Now, actually, what's interesting, if you go to the previous month, so the previous month you were doing it differently. You were not closing at threshold, and straight away, now this month finished at break even. I think you actually finished up 5%, didn't you? So one of the questions that people will ask you is, have you ever let it go past your threshold, and what happened? Well, we can see here in March, yes, you did. In fact, on one day you let it go to like 68%, which is literally double. You've got a 58% one there. If you'd cut these at your threshold where it was supposed to be, you would have made a huge profit on this month instead of a 5% profit. So I think this illustrates it really nicely. Now, the reason you were doing this is you were essentially playing around with your risk. And also, we should point out that March and April, with the stuff that Trump was doing, the markets were absolutely insane, weren't they? And you were trying to give it a bit more breathing room, which actually we can see now with the benefit of hindsight. As I said, if you'd cut you where you were supposed to cut at your threshold, you would have come out on top. So that answers a question for everyone very nicely. If you let it go past your threshold, you ultimately just come out worse off. So the next question then is, okay, you're making this money, your account's getting bigger and bigger. When do you withdraw and how much?
So personally, I only withdraw if I need something. Like I withdrew 1K. That was me going out. I just splashed out 1K on the spot. Boom. Because it's very good. It's very important that you withdraw, because you need to reward yourself. You need to understand that it's real money. Sometimes you're trading, you're growing, but you don't acknowledge it as real money. You just see numbers. So like in reality, if you saw, for example, if you saw like 180 on the table, you're gonna take it. But when look at these numbers compared to all these numbers, you're like, what? I don't give a shit about 180. I don't care about it. I want more. So you need to it's good to withdraw and then acknowledge that this is real money. This is something that you should be proud of. You should be disciplined. You shouldn't be messing around with it. You shouldn't be over risking it, because again, it's real things.
Yeah, you kind of have to make it real and reward yourself every now and again. But ultimately, you're not going to compound the account forever. You are making withdrawals, but you're doing it kind of as and when you need it or when you feel like it, essentially.
Pretty much.
The final sort of thing that people are going to ask, and we've only got like 2 minutes left, is they're going to want to know how you choose your direction. So what I'm going to do, I'm just going to pause the recording now, and then we'll jump to TradingView and we'll see if we can find a good example. Okay, so we've jumped over to TradingView, and what Romario's going to do now is just very quickly and simply talk you through how he picks the direction for the day.
Awesome. So first thing I do, so this is, for example, today's candle. First thing I do, I go on daily. I look at yesterday's candle. I don't care about the wick. The wick doesn't matter to me. It's the body. The body shows me where the buys or sells, where everyone's interest is. So this is daily. I'm on yesterday's candle, looking at yesterday's candle, and compare yesterday's candles to the day before. I see that, okay, cool. Yes, this candle broke underneath it, full body. Therefore, I'm assuming it's going to be a downtrend. If this was engulfed and inside the body, then I'm assuming there wasn't strong enough sells, so it's going to continue going buys. But at this point, the body has broken the previous candles body as well. So it's underneath, as you can see, this candle's here and this candle's underneath. So then after that, I go on the 4 hours. 4 hours, I look for the first candle of the day. First candle of the day will be at 4 a.m. As you can see right here, this is the first candle. Right here, guys. So same principle. You look at the body. You don't care about the wick. I don't really care about the candle patterns and all this, like doji. I don't really care about that. I just look at the body. Same principle. As you can see, this candle broke underneath the previous candles, and this is the first candle of the day, by the way. It broke underneath it, so again, it's another sell signal. So we got 2 confirmation. The third thing, because for me it's only 3 confirmation, I look at moving average. Very simple, but I always do it last because I don't really care. It's not letting me do it. But I'll look at moving average, and then I have a moving average of 20, 50, 100, and 200. I look at the 20, has it crossed over? Is it above? At this point, it's saying buys. Well, this is the beauty of only having 3 signals, is that 2 can be saying the same thing and 1 can be saying the wrong thing. Again, the strategy doesn't really matter because the direction doesn't really matter because the strategy is literally called how to make money when you're wrong. So even if I'm wrong, even if it's going against me, I can still make money because I'll manage it. And so let's say we went for sales. We're going to continue. So let me take off these. As you can see, it's each zone. And then we play them out. So you see?
We're looking at like daily and H4, right? So higher time frames to get the bias. You then confirm on a lower time frame, which is like you're currently on the 30-minute, but you might use the 15. And you're looking for it to then cross the MAs in that direction. So you have 3 confirmations. If 2 tell you one thing and 1 tells you the other, you will go with the majority. That's why you use 3, so that you always get a majority. But then you are acknowledging, and this is the thing, a lot of people really obsess over getting direction right. And literally the whole point of the strategy is that even if you have a genuine edge, let's say you are genuinely right with the direction 51% of the time, you're still wrong 49% of the time, which means almost half the time you have to manage your trades. And then you just said, very kind of nicely summed it up. The whole point of the strategy is even when you're wrong, you manage it and you make money. So that's where the real success is. Nobody has to worry about getting the direction right, do they? Because when you get it right, your trades go blue and you just make money. The hard bit is when your trades go red, and that's when you're managing it. So I think you've summed that up really well there, mate. And as we can see, this trade worked out. Prices dropped through the MAs. So in this case, all 3 things align. But what it ultimately comes down to is the risk management. It's this stuff we're looking at now. This is what makes the money. This is what allows you to survive the days when you get it wrong. And also on the days when it hits your threshold, that's what protects your account and ensures that you can actually trade again tomorrow. So that's the whole key takeaway from this video is don't go looking for stuff that's not there in terms of magic candle patterns and what's he doing that I'm not doing. Risk management is all it comes down to. Follow the strategy to the T, control your risk, and that's it. That's literally it, isn't it, mate? To be honest, that's all you have to do, and the 100%. Results will follow.
100%. And here's the thing: people shouldn't even be scared of trading because, again, the strategy is literally if you're wrong, you still make money. Like it's the concept of you're risk free in every single trade. As long as you manage it to how you should, then great. And risk management as well. Like me, I don't even really care. Like you can see that I've hit my threshold and I continue trading. Like I've made money even when I hit my threshold. Imagine starting the month and you hit your threshold. Doesn't faze me.
Well, you literally did it. Yeah, very first day of the month. There, look, you hit your threshold on day 1. A great start to the month. I think we'd all agree. And then, but look, you just totally ignored it. You put it behind you. The next day you had a brilliant day, and then the day after you'd fully recovered it and more. And that's because you have the confidence, because you've done this now, month after month after month, and you know how it plays out. You know that sometimes it hits your threshold, mostly it's not going to, mostly you're just going to make money, whether you got the direction right or wrong, and it's literally just a case of following the plan and the results will follow. So listen, thank you very much for your time, mate. We're slightly over the length that we wanted on this video, but I think it's been hugely helpful. A lot of people will love this. So thanks for your time, mate. Very much appreciated.
Anytime, brother. Take care, guys.
Awesome.